Welcome everybody to the trading room. Just making sure sound is going through, and I believe it is. So we're good to start. Okay, guys. My name is Saul. Welcome to the trading room. Glad to be with you. Happy Monday. Happy start of the week. Before we get started, please. Quick disclaimer: this is going to be live market demonstration. So anything I show here is not meant to be buy or sell signals. It's just the way I analyze the markets, and I look at the fundamentals and the technicals and key levels in order to set up my trades and my long-term positions as well as my short-term ones. So if I say something is not for you to go and replicate that on your own account, you need to be responsible for your own trading and your own performance. Hopefully you can take some concepts from this session and apply it to your individual situation. Now, as every Monday, I want to go to the larger time frames, to the dailies, to have a broad perception of what's going on, and to try to find hints of what's the next long-term movement and what the fundamentals are telling us. Other than that, if we have some time, we might go to lower time frames and try to find for some opportunities. We'll see the calendars, we'll see everything we have there, and we have a fun session. Now, before we start, let me share my screen here. Brian, hello. Matthias, how are you? Welcome. Why you think USD might crash later in the year on based on macro? Yeah, Brian, we'll relate to that just in a minute on the USD. Before we start, guys, I really want to show you. We just launched last week, the page of the Traders Day Live. Okay, so we are organizing a live event in the UK, okay, in London for next year, 2023. So there's some time before it comes, but we just launched it and we're very excited. We're bringing top speakers to speak, performance coach, and a lot of people, high tier speakers to speak about crypto, equities, forex, everything, and of course the team of the 5ers will be there. So very excited to meet you all guys. So we launch it in advance so people can you have the opportunity to make the arrangements if you plan to come. But really, if you're in the UK or Europe, it's a no-brainer. It's going to be a very exciting day, packed with content. There's going to be a training tournament and lectures. It's going to be fun. So make sure you visit the website. I will now throw it here so you can have it as well. And okay, that's like the quick announcement, and tickets are selling fast. So really, if you're interested, think you want to come, start getting your spot. Other than that, let's get into our business, and I will start with the calendar because we have a very interesting week. Keith, hi. Anna, how are you? So today's a quiet day, okay? Monday, end of the month, quiet day, relatively quiet day. So let's move on, okay? Already tomorrow we got expectative of increasing rates in Australia. Okay, it's happening like several times during the same year. So we would think that would increase the value of the Aussie. But if we continue, okay, there's some high impact level announcements here. But if we continue to Wednesday, we see the same for the US. Okay, so as we look for what's the inflation, current inflation in US. So it's around, rose in the 10%, 9-10%. So the Fed, to try to stop the inflation, they will keep increasing interest rates. So they have done it. We started the year in about 2%, 1% interest rate. We're already at 3.25, and they're about to increase it already to 4%. Okay, so they're just saying we're gonna keep increasing to stop the inflation. There's a lot of repercussions to that. We see the real estate being very affected in the US because of that, and we see the stock market suffering because of that. But the first thing they want to do is to stop the inflation, and as they keep increasing interest rates, we will keep seeing the US strengthening. Okay, and we'll see how that looks. But as a response to that, we see other economies, large economies, doing the same. Okay, because we cannot have only one economy with high interest. So we see the GBP. Okay, we see UK also. This very weak to keep increasing, and on top of that, we have, of course, the non-farm payroll on Friday. Every Friday, first Friday of the month, we have the non-farm payroll. So it's going to be a very volatile week. As these events, as these numbers are, released in advance, they tend to be already priced in the chart. But if some of those, there's a surprise, okay, if we expect a 3% and they increase by less than that or more than that, there will be huge volatility in the market. Okay, that's why you want to be aware of those events, and we'll see how that's translated into the chart. So if we see the dollar index, we see the uptrend and how has been strengthening. And if we compare that to the Euro USD, it's very similar to the Euro USD. The dollar index is very based on the performance of the euro. So usually the dollar index and the Euro USD, they're like a mirror. Okay, they look just the opposite. So we see the strength then of the dollar against the euro. And there was a question, and I know too the large implication. I've been saying that large implications of having a strong dollar not being good for the U.S. economy, as it keeps money from abroad to get to the U.S. because it feels perceived more expensive, and because the amount of global debt that it's out there quote in U.S. dollars, so has a very large repercussions to the global economy. So there will be attempts of trying to weakening the USD. Okay, so that's for your question, Brian, and that's what I'm thinking on. That's what I'm building on, a weakening dollar, steps or policies globally to start to weaken the dollar a little bit against all other currencies, so we don't get to that those points where developing economies fail on paying back their debts or something like that, countries crashing, all that. And we can start seeing hints of that here. Okay, if we just look at technicals and we analyze just the technicals on the dailies of the Euro USD, we had the lowest low. Okay, that was on the pound. We had the lowest historical low, and we start forming some higher lows. Okay, we started this higher low and we had this high over here, and we've said like, for this to really form like a reversal pattern, we need to break previous high, okay, and to establish a higher high and a higher low. So we kind of had that break, and that's right at the parity level. So as we just on the dailies, okay, as we try to break the previous high to establish a trend reversal, it just went back down. Okay, technically this is like an attempt to break, and then like a false breakout. If I was trading this on the 5-minute chart, 1-minute chart, I would be shorting this. Okay, this is like a false breakout. This 1 bar long and 1 bar short is like false breakout. For this to really establish a breakout of this previous high, I would like to see like continuation of the break. But in any case, it's kind of it is like not very relevant, but it's a higher high, and that's why the technicals are not very clear, and we're just pulling back down there. But I think the next big movement will be to the opposite side. But of course, as long as we, the Fed is going out there and say, okay, we'll keep increasing interest rate, will be very hard to reverse this trend. So probably we'll keep seeing, this sideways movement from now on, a lot of, movement to the sideways before we get a new leg either to the high or to the low side. Now we're pulling back of that, of that push higher, and we're kind of pulling back, and we want to now see where's this likely to stop, okay, and probably to turn and continue to the upside, because this might go down to establish a new higher low than previous one, and to reverse and continue higher. So if that's going to happen, where can that happen? Okay, now you go to lower time frames and you look more in detail how is this movement forming. So now you can see more clearly areas like this, okay, demand areas like this one being formed, or areas like that one. And those are the areas where the price, this movement down, is more likely to stop, and from there react either to continue high, or to reverse and turn to the upside, or to push lower. I think the camera is fading here. Just let me fix that. Whoop. Okay, so no camera, guys, but we'll you'll keep listening to me. So these are the areas where the price is likely to turn. Okay, now if you see some videos on technical analysis, there's like those guys who like the trend support and trend resistance and how to take advantage of those movements. So sometimes they just go and they draw a line like this. Okay, this is the downtrend, and we just broke the trend line. Okay, we're like trending down. Now we broke the trend line, and now we want to wait for a pullback to the trend line and then to buy from that trend line. Okay, so why would that pattern work? Okay, because if you see where the test of the trend line would potentially be, you notice it's right at the demand area that we just saw or identify on the 1 minute chart. Okay, isn't that fascinating? So when this pattern works out, okay, the break of the trend line and the pullback towards the breaking area of the trend line and then the continuation higher, has nothing to do with actually breaking this line, okay, the trend line, but it has to do with the fact that the price meets a demand area, okay, but not always that demand area is formed, and that's why the pattern sometimes works and sometimes doesn't work. Okay, so it's just like a different approach to seeing patterns and trying to understand why sometimes they work and sometimes they do not work out. So if you see someone there just drawing the trend line and we're approaching that and it's time to buy, just know that there's nothing to do with this line right here, but it's all about the demand area right there. Okay, that happens to be on at the same point. Okay, so that's for the EURUSD. Myself, I'm long-term bullish bias, so I will be looking for buying at these areas, keeping in mind that the increasing rates haven't ended, and we might continue to see the dollar strengthening, and we see similar patterns on all the majors. If we go to the pound, we've established again a higher low. We have this previous high. We're kind of breaking it. Okay, again we met supply very early, so we're stopping there. So we want to go to lower time frames and see how the breakout happened. Okay, so we see at the breakout area, we form a mid-range demand, and then we have another demand area around down here. So at those areas, I would be looking to buy, okay, to see if we can start a new leg to the upside. If that fails, then we'll probably see a retracement all the way to the lows. But as long as the UK is going to keep increasing interest rates, we should see an appreciation of the pound against currencies and, of course, against the US dollar. Similar but not quite equal is the Aussie and the Kiwi. We haven't established that, technically, we haven't established that higher low. So if we do have a higher low here and we have a higher low here, we haven't established that on the Aussie nor on the Kiwi. So the Aussie is kind of trying to perform better than the dollar, but we need to see a higher low being formed and then the break of this high to establish that this is trend reversal. Okay, this looks like a classic, reverse head and shoulders. We got the left shoulder, the head, and we potentially forming now the right shoulder. So if we go to lower time frames, let's see if we can find some demand areas and potential stop areas. Okay, so right now we are at this mid-range demand. Okay, you can see the explosion here forming a new demand down here, and we have that area there. So those are the areas where then on the dailies we might form that turn either here or here, and we would see that, okay, if we clean everything, we would see that forming the reverse head and shoulders. Okay, and that would be a good trend reversal pattern, and from there we could start potentially seeing a new leg higher. So as long as we respect those levels, also here my bias would be to start building long positions. Okay, on the Aussie dollar year, I'm a bit more hesitant to where is this going. Trend is clearly bullish. So I think we spoke about this intervention last Friday or 2 weeks ago on Friday. Bank of Yen, intervening. They're trying to keep the rate or to increase higher to keep the uptrend. But technically, this is just like kind of a pullback. Okay, and we met now this demand or support from back here. Now we're reacting to that. So the question is, are we going to test highs and potentially break higher, or is this enough supply? Okay, enough selling orders are waiting there in order to create now the beginning of a leg lower. This is harder for me to read, also because on the hour this is very, very choppy and very unclear. Okay, of course we see the intervention, so we have the supply that's clear and it's untested. So if we get there, I would like to sell, but I don't know if there would be enough power to continue lower, especially because immediately after that day, instead of having continuation lower, we had a bullish day. Okay, and then we're like struggling to continue down. So I don't know if we'll be able to establish a turn and start a new leg lower, or if we're just going to accumulate more buyers, and people will still think that that the dollar will keep increasing in value against the yen. Okay, so this is a tougher one. Okay, so I'm keeping kind of aside. I don't have a clear bias here, nor on the dollar CAD. It's also has been harder for me to read. There's a lot of choppiness and sideways movement, so I'm keeping in the lines here, and as well as on the franc. Gold is going to be very hard because of the fundamentals of gold and being quote and priced on US dollars. As long as the dollar keeps getting stronger, it's going to be very, very hard for gold to make the turn. Okay, so we on lower time frames we kind of have demand areas on. Okay, we established this demand area, we reacted to that one nicely, and that formed a new demand area. So we might react one more time, but on the dailies we just see how we're pressing to the lows, and the more times we press to those lows, the less buying orders are staying there or waiting there to get active, and the probability of breaking those lows increases. Now, how a break of those levels might be, fundamental, substantial. We might go many points towards this area or that area there, but I don't see hints here of a potential turn in the market. Okay, so fundamentally, I usually want to be long in the dollar, in the gold dollar chart, but I just don't see here the pattern of a trend reversal, okay, or hints of this about to turn or something. So I'm keeping aside. Same for stocks. Okay, I stocks, I want to be bullish. I try to be bullish all the time. In fact, stocks is something that I buy and accumulate, and these times where it's like kind of cheaper, I buy more. But for investing, now for trading, again, as long as the dollar keeps getting stronger, it's going to be hard to establish like a turn on the stocks. Since again, we see if you guys live in Europe or Japan or whatever it is, now it's for you more expensive to get US stocks since the dollar is very strong. But as we get the dollar to calm down and get a little bit more affordable, then people will go back to US stocks, and we'll see a potential leg higher. Okay, so it's holding there. Okay, but you see how it's struggling to get. You see how it's forming like compression. Okay, it's not forming like a healthy up leg, but it's just going up and down. So as long as this keeps compressing, when it meets like a supply like this area, we might see another leg to the downside, and just later on, probably to the end of the year or the beginning of next year, we might see a turn to the upside. Okay, so I don't have a clear bias. I want to see more hints of this, pulling back and the dollar really started to weakening before I go long on my stocks. So those are the majors. Let me see some questions here. Not much USD trading gonna be happening this week, so I love this time for live stream. It is just for today. Are going to implement the morning sessions, Anna. So so during the week it's going to stay in the afternoon for the US session. Wednesday we're going to try to start the London session, so we can have Asian traders and European and UK traders. So this Wednesday, me and Jordan are going to do a live session together for London sessions. Not going to be exactly the same time as today, but it's going to be during the London session. So we will announce the time. Euro USD broke out of the long-term trend line. USD likely going down in value. I understand supply and demand wars for you, but it's a bit naive to say trend lines don't work. No, it's not naive. You can draw. Me drawing the line doesn't mean the market is just there. Okay, it's going to react to the trend line. Drawing trend lines is something that institutions don't do. So they just look at key levels they want it to be positioned, and sometimes the trend line happens to work out because of supply and demand areas, like I explained here. But if there was no supply here, okay, if this break up would have been not a true break, but a compression break, no, it doesn't matter that the trend line is here. The trend line would not work, would not hold, and we would see the matter just continuing lower. Okay. Hope that makes sense. Okay, other than that, I think we can look for lower time frames and to see if we have some opportunities. So let's go to the lower time frames to see how we're doing there. I feel the market's a bit quiet. So as I'm positioned for the long side, let me see how many pips I got. 95. Okay. So my setup, I established I want to be long as long as we're above this demand area. So after this break lower from that support, I imagine we're facing that direction. We are now reacting to something there, but I don't think that's enough. So I see price going down a bit more before we continue, before I start my building some longs. No, so now the target, the scalp area is right there, because there we're gonna start seeing some support. Okay, so if you want to just scalp and have like an easy target, you want to get out of the market before the support, because at support you need to expect a reaction to the upside. Okay, so if you think, or if you see the market is approaching the support area, with a lot of strength, you can just try to swing your trades and then to look for the next for the next key level. Okay, okay, but we see reaction right there. Now, if we test the support one more time, we must see a break, and around that area I'll feel more comfortable going long. I think we're going to test this area, and from that area we should see a turn. So I'll wait for that area for the market to test that area. Just trying to squeeze a little bit of trading. So I'm just seeing at this breakdown, the retest, we have resistance right now, and we have a little bit of supply there. So as long as we stay below there, I can try to sell, targeting the demand area, and from the demand area we can start building some longs. That's kind of my analysis. Guys, I'm going to keep today's session short. I really wanted to meet with you, but I will have to jump into some meetings, so we'll stick around a few more minutes. We'll see if we have enough volatility, and then I think we'll wrap up. So if you have any time frame you tend to analyze or you wanted to discuss together, we can just do that right now. I see the market is a bit quiet. Let's see if there's something else moving a little bit more. So yeah, so that's a good question. So if I need to establish where am I getting out of my trades, correct? Where do I recognize my trade is wrong? So for example, here, I was selling at these levels. So first thing I can do, if I see a break of these levels, I can get out. So I can recognize my trade is, I need to get out of my trade there. But since I start very, very small and I don't see a lot of, supply here to prevent a break from these levels, I just prepare myself for the break of that, and I identify there's some supply area here, and we had some resistance there. So I just say, okay, my whole setup gets invalidated above that area, okay, for example. So instead of just cutting my loss there, okay, taking my loss and cutting my trade there, I prepare myself for building into my setup. So I took a short, okay, it went in my favor, so I took profit. But if it goes against me, I can either take the loss, or depending on how that breaks happens and forms, I can add into my position right there and add a little bit more at the supply area, looking for the turn, since what I'm expecting is market to visit the long-term demand. And then, of course, if we break this supply area, then I wanna, cut everything. But on the process, market will not fly just straight, boom, like this way. Unless there's like a news or something like that, then of course it goes that way and there's nothing to do. But in the process, we might see market going like that. So if I'm adding on the right levels, I can make make profit during the whole process. Okay. So the most important thing is to see how these legs higher form. If they form like this, okay, like this formation, like a leg, like an impulse, or if they form more like a compression, which is I don't have a great example, but maybe this formation right here. Okay, so you see the market just going down and up and down and up and down. So if they form in a channel, I want to be shorting. If they just go straight up like this in an impulse, but to the upside, then I want to understand the market is not likely to stop, and I want to reduce my exposure. Okay, so not on Mondays when you don't have that large introduction and we just go into trading. We have the opportunity to see like setups, longer setups, and I can go deeper into these concepts. But that's the idea. I recognize many times my first entry is not the best one, so I start small and I build positions. Okay, when price approaches more relevant levels. Okay, this wasn't a great level. It's a good resistance, but it's not a key level. This one is a more relevant level. So at that point, I want to be building. But in the process, I can make money. Okay, instead of waiting for the price to get there, I can make money in the process. That's the idea. Yeah, so that's a great question, Manik. So all what I say, okay, if I add it here and I add it here and I add it here, I don't want to be, and everything goes wrong, and I take my stop loss of everything and I cut everything. All those losses need to be around, your risk tolerance or your risk profile. So you can establish it's going to be 0.5% or 1% or 2% of the account, but you want to make sure if everything goes wrong, you don't lose, one more than a certain percentage of the account. That's the idea. So for me, on lower accounts, on smaller accounts, I was able to do that. You know, my risk appetite was larger. When I started trading larger and larger accounts, I try to keep that around 1%. Okay, not more than that. Yeah, that's the idea. Okay, guys. Yeah, I don't think the market is moving a lot. I was thinking of going short here again, but I just see, you know, we've spent 1, 2, 3, 4, 5 minutes, and we're moving 1 pip. So yeah, let's just wrap up here. I'll have to jump into some meetings, but thanks for coming, guys, and thanks for staying. And yeah, you know, hopefully you can get some value from these sessions and some opportunities from these sessions. And we'll meet you tomorrow. There will not be a trading room, but Wednesday morning, okay? UK session, London session, we'll send the exact time. Me and Jordan will be trading here, okay? So we'll see you on Wednesday. Thank you, guys. Have a nice week. Bye-bye.